Hello guys. Welcome to our YouTube channel. Today, we shall be discussing the concept of GST registration. In case of sale of goods, if aggregate turnover exceeds 40 lakhs rupees, GST registration is compulsory required. And if turnover exceeds 20 lakhs rupees, special category of states are required to get registration. In case of services, if aggregate turnover exceeds 20 lakhs rupees, GST registration is compulsory required. And if turnover exceeds 10 lakhs rupees, special category of states are required to get registration. Registration is not required for the following: agriculturists, persons falling in threshold exemption limit, persons making nil rated or exempt supplies of goods and services, persons making non-taxable or non-GST supplies of goods and services, activities that are neither supply of goods nor services. Compulsory registration is required for the following: individuals registered under the pre-GST law, that is excise, VAT, service tax etc. interstate suppliers, businesses with turnover above the threshold limit, casual taxable person and non-resident taxable person, agents of a supplier and input service distributor, those paying tax under the reverse charge mechanism, person who supplies via e-commerce aggregator, person liable to deduct TDS, every e-commerce aggregator, person supplying online information and database access or retrieval services from a place outside India to a person in India, other than a registered taxable person. An offender not paying tax or making short payments, genuine errors, has to pay a penalty of 10% of the tax amount, due subject to a minimum of 10,000 rupees. The penalty will be 100% of the tax amount, due when the offender has deliberately evaded paying taxes. It is quite easy to register for GST. Just log into the GST portal, upload the required documents and submit the application. Registration certificate will be granted online. Today we shall be discussing the concept of Hsn System under GST. Hsn Code stands for Harmonized System of Nomenclature. This system has been introduced for the systematic classification of goods all over the world. Hsn Code is an 8-digit uniform code that classifies products and is accepted worldwide. The first 2 digits of Hsn Code highlights chapter, next to heading, next to subheading, and last to tariff item. These Hsn codes must be declared in every tax invoice issued by the taxpayer under GST. All 8 digits of Hsn Code is mandatory in case of export and imports under the GST from April 1, 2021, if aggregate annual turnover in preceding financial year is up to 5 crores, then 4 digits of Hsn codes are to be declared, and if turnover exceeds 5 crore, then 6 digits of Hsn codes are required to be declared. However, a registered person having aggregate turnover up to 5 crore in the previous financial year may not mention the number of digits of Hsn code in a tax invoice issued by him in respect of supplies made to unregistered persons. Today, we shall be discussing the concept of invoicing under GST. An invoice or a GST bill is a list of goods sent or services provided, along with the amount due for payment. If you are a GST registered business, you need to provide GST complaint invoices to your clients for sale of goods or services. Your GST registered vendors will provide GST compliant purchase invoices to you. A tax invoice is generally issued to charge the tax and pass on the input tax credit. A GST invoice must have the following mandatory fields: invoice number and date, customer name, shipping and billing address, customer and taxpayer's GSTIN, if registered, place of supply, Hsn code/SAC code, item details that is, description, quantity, number, unit, meter, kg etc., total value, taxable value and discounts, rate and amount of taxes that is, CGST or SGST or IGST, whether GST is payable on reverse charge basis, signature of the supplier. The GST Act has defined time limit to issue GST tax invoice, revised GST bill, debit note, and credit note. For goods, normal case, it is on or before date of removal or delivery. For goods, continuous supply, it is on or before date of issue of account statement or payment. For services, general case, it is within 30 days of supply of services. For services, banks and NBFCs, it is within 45 days of supply of services. Penalty for non-issuance of invoice is 100% of the tax due or 10,000 rupees, whichever is higher. And for incorrect invoicing is 25,000 rupees. For supply of goods, 3 copies of invoices have to be issued. That is, the original for recipient, duplicate for transporter, and triplicate for supplier. For supply of services, 2 copies of invoices have to be issued. That is, original for recipient, and duplicate for supplier. Today we shall be discussing the concept of E-Invoicing under Gst. E-Invoicing or electronic invoicing is a system in which business-to-business invoices are authenticated electronically by GSTN for further use on the common Gst portal. Under the electronic invoicing system, an identification number will be issued against every invoice by the Invoice Registration Portal (IRP) to be managed by the GST network GSTN. The first IRP was launched by the National Informatics Center at invoice1.gst.gov.in. All invoice information will be transferred from this portal to both the GST portal and e-Waybill portal in real time. Therefore, it will eliminate the need for manual data entry while filing GSTR1 return, as well as generation of Part A of the e-Waybills, as the information is passed directly by the IRP to GST portal. From 1st of January 2021, e-invoicing will be applicable to businesses exceeding the 100 crore turnover limit in any of the financial years between 2017-18 to 2019-20. However, irrespective of the turnover, e-invoicing shall not be applicable to the following categories of registered persons for now: an insurer or a banking company or a financial institution, including an NBFC, a goods transport agency, GTA, a registered person supplying passenger transportation services, a registered person supplying services by way of admission to the exhibition of cinematographic films in multiplex services, and special economic zone unit. Penalty for non-issuance of invoice is 100% of the tax due, or 10,000 rupees, whichever is higher. And for incorrect invoicing is 25,000 rupees. Today, we shall be discussing the concept of composite supply under GST. Composite supply means a supply is comprising 2 or more goods or services, which are naturally bundled and supplied in with each other in the ordinary course of business, one of which is a principal supply. It means that the items are generally sold as a combination. The items cannot be supplied separately. The tax rate of the principal supply will apply on the entire supply. Example: goods are packed and transported with insurance. The supply of goods, packing materials, transport and insurance is a composite supply. Insurance, transport cannot be done separately if there are no goods to supply. Thus, the supply of goods is the principal supply. Tax liability will be the tax on the principal supply, that is, GST rate on the goods. Example: a passenger has booked a Rajdhani train ticket along with meal. It is a composite supply because meal and train can't be sold separately. Hence, the transportation of passenger is therefore the principal supply. Today, we shall be discussing the concept of composition dealer under GST. Businesses with annual turnover up to 1.5 crore rupees can opt for composition scheme. Turnover of all businesses with same PAN has to be added up to calculate turnover for the purpose of composition scheme. Only manufacturers of goods, dealers, and restaurants not serving alcohol can opt for composition scheme. For manufacturers and traders of goods, 0.5% of CGST and SGST each has to be levied. For restaurants not serving alcohol, 2.5% of CGST and SGST each has to be levied. A dealer registered under composition scheme is not required to maintain detailed records as required by a normal taxpayer. A composition dealer is not allowed to avail input tax credit of GST on purchases. It has to issue bill of supply because tax has to be paid by the dealer out of pocket. It is not allowed to recover the GST from the customers. Tax under reverse charge mechanism has to be paid wherever applicable. Rate under composition scheme should not be used for reverse charge purposes. Also, no ITC is available for tax paid under reverse charge for a composition dealer. IGST should not be paid by a composition dealer. Composition scheme is available only for dealers doing interstate supplies. If a dealer is involved in interstate supplies, then they have to opt out of the scheme. Today, we shall be discussing the concept of e-Waybill. What is an e-Waybill? E-Waybill is an electronic waybill for movement of goods, to be generated on the e-Waybill portal. A GST registered person cannot transport goods in a vehicle whose value exceeds 50,000 rupees, single invoice or bill or delivery challan, without an e-Waybill. When an e-Waybill is generated, a unique e-Waybill number, EBN, is allocated and is available to the supplier, recipient, and the transporter. When e-Waybill shall be generated, waybills must be generated on the common portal for all these types of movements. For certain specified goods, the e-Waybill needs to be generated mandatorily, even if the value of the consignment of goods is less than 50,000 rupees. Interstate movement of goods, by the principal to the job worker, by principal or registered job worker. Interstate transport of handicraft goods by a dealer, exempted from GST registration. Who shall generate e-Waybill? A registered dealer, sender, shall generate e-Waybill. If sender is not registered, then registered recipient shall generate e-Waybill. If recipient is also not registered, then transporter shall generate if applicable. Else, sender or recipient shall generate, enrolling as citizen. Validity of e-Waybill. Other than over-dimensional cargo, if distance traveled is less than 100 kilometers, then validity is from generation of e-Waybill till 1 day. For every additional 100 kilometers, or part thereof, validity is additional 1 day. For over-dimensional cargo, if distance traveled is less than 20 kilometers, then validity is from generation of e-Waybill till 1 day. For every additional 20 kilometers, or part thereof, validity is additional 1 day. Validity period of e-Waybills can be extended by the generator, either 4 hours before expiry, or within 4 hours after expiry of e-Waybill. Once validity is extended, the new e-Waybill number gets allotted in place of the old one. Cancellation of e-Waybill. If goods are not transported at all, or not as per details of e-Waybill, e-Waybill can be cancelled within 24 hours of generation. If the e-Waybill is verified by any empowered officer, it cannot be cancelled. Rejection of e-Waybill. Recipient can accept or reject the e-Waybill. E-Waybill will be deemed to accepted if there is no communication within 72 hours of e-Waybill generation. Consequences of non-conformance of e-Waybill rules. Penalty of 10,000 rupees, or tax sought to be evaded, whichever is greater. If goods are transported in contravention of the e-Waybill rules, all such goods and conveyance used, and related documents, shall be liable to detention or seizure. E-Waybill is not required if goods are being transported by non-motorized conveyance. For example, horse carts, or manual carts, and from one custom port to another. So, that's all for this topic. Today we shall be discussing the concept place of supply in case of import and export of goods. When goods are imported into India, place of supply will be location of the importer and IGST will be charged. Example 1, Ms. Malini imports school bags from China for her shop, registered in Mumbai. Place of supply will be Mumbai. And IGST will be charged. When goods are exported from India, place of supply will be location outside India and exempt under GST. Example, Ms. Anita, Kolkata, exports Indian perfumes to UK. Place of supply will be UK. And it is exempt under GST. Today, we shall be discussing the concept of place of supply for restaurants. If the services of restaurant and catering, personal grooming, fitness, beauty treatment, health service, such as cosmetic and plastic surgery, for beauty purpose only, and not basic health services, which is exempt from GST, is provided to any person, then place of supply will be the location where the services are actually performed. Raj Hotels in Mumbai, Maharashtra, provides catering services to Polaris Limited, registered in Gujarat, for their annual sales event in Mumbai. Place of supply will be Maharashtra. And CGST and SGST will be levied. AJ, a chartered accountant, Karnataka, has been advised to take an Ayurvedic treatment at Om Ayurvedic Center in Kerala. Place of supply will be Kerala. And CGST and SGST will be levied. So, that is all for this topic. Today, we shall be discussing the concept of place of supply for events. Supply of service. Service of admission to an event, or amusement park, or any other place. Services, ancillary to above. Place of supply. Location, where the event is held, or the park is located. Supply of service. Services of organizing events, such as cultural, artistic, sporting, scientific, educational, entertainment. Includes supply of services, in relation to a conference, exhibition, etc. Place of supply. Supply is to a registered person. Location of such person. Unregistered person. Location of the event. If the event is held outside India, then the place of supply shall be the location of the recipient. Supply of service. Services, ancillary to organization of the events, referred in above, or assigning of sponsorship to such events. Location of the service provider is immaterial. Admission to amusement parks. Example, a person in Karnataka buys admission tickets for Nico Park, amusement park, in Kolkata, West Bengal from the Nico Park organizers. Supply of service, admission. Place of supply, West Bengal, location of the park. GST, see GST plus SGST. Events managed, for registered persons. Example, Yardi Event Managers, Mumbai, is hired by Akash Electronics, Gujarat, to organize their annual sales event, in Mumbai. Supply of service, event management. Place of supply, Gujarat. Since the recipient is a registered person, location of recipient is the place of supply. GST, IGST. Events managed for unregistered persons. Example, Yardi Event Managers, Mumbai, is hired by Ms. Malini, based in Bangalore, to manage her sister's wedding, held in Mumbai. Supply of service, event management. Place of supply, Mumbai. Since the recipient is unregistered person, location of event is the place of supply. GST, see GST plus SGST. Events managed outside India, for registered persons. Example, Yardi Event Managers, Mumbai, is hired by Akash Electronics, Gujarat, to organize their annual business collaboration event, in Singapore. Supply of service, event management. Place of supply, Gujarat. Since the recipient is a registered person, location of recipient is the place of supply. Location of event is immaterial. GST, IGST. Events managed outside India, for unregistered persons. Example, Jack and Jones, Event Managers, Mumbai, is hired by Ms. Malini, based in Bangalore, to manage her sister's wedding, held in Dubai. Supply of service, event management. Place of supply, Bangalore. Since the location of event is outside India, the location of recipient is the place of supply. GST, IGST. So, that is all for this topic. Today we shall be discussing the concept of place of supply for services. If service is provided to a registered person, then place of supply will be the location of the registered recipient. Example, 1. Mr. AJ from Karnataka provides consultancy services to MS Sumati Technologies Limited, registered in Maharashtra. Place of supply will be Maharashtra, location of registered person and IGST will be levied. If service is provided to an unregistered person, then place of supply will be the location of the recipient, if the address is available on record, and location of the supplier of services in other cases. Example 1. Mr. Arun, Karnataka, provides consultancy services to Mr. Vijay, unregistered but address on record shows Tamil Nadu. Place of supply will be Tamil Nadu. And IGST will be levied. Example 2. Mr. Taran, Karnataka, provides consultancy services to Mr. Anand, unregistered and address is not available. Place of supply will be Karnataka. And CGST and SGST will be levied. Today, we shall be discussing the concept of place of supply for training. Where training service is provided to a registered person, place of supply will be location of such registered recipient. Example, Kyati Industries Limited, Gujarat, hires First Source Consultancy, Mumbai, to impart soft skills training to its employees. The training will be conducted in Mumbai. Place of supply will be Gujarat. Since the recipient is a registered person, location of recipient is the place of supply. IGST will be charged as supplier is in Maharashtra, and recipient is in Gujarat. Where training service is provided to an unregistered person, place of supply will be location where the services are performed. Example: Ms. Anita, unregistered person based in Bangalore, signs up with Gavin Consultancy, Mumbai, for a training on public speaking. She attends the training in Mumbai. Place of supply will be Maharashtra, since the recipient is unregistered person. Location where services are provided is the place of supply. And CGST plus SGST will be charged. So, that is all for this topic. Today, we shall be discussing the concept of place of supply in case of transportation of goods, where the service of transportation of goods, including by mail or courier, is provided to a registered person. Place of supply will be location of such person, that is receiver. Where the service of transportation of goods, including by mail or courier, is provided to an unregistered person, place of supply will be location at which such goods are handed over for their transportation. Example: intrastate transportation of goods. XYZ, a goods transportation company, based in Karnataka, is hired by Akash Electronics, registered in Karnataka, to transport 50 TV sets. Supply of services, transporting goods. Place of supply will be Karnataka. The location of registered person. And CGST plus SGST will be charged. Example: interstate transportation of goods. XYZ, a goods transportation company, based in Karnataka, is hired by Vinay Garments, registered in Maharashtra, to transport 200 saris from Bangalore to Mumbai. Supply of services, transporting goods. Place of supply will be Maharashtra. The location of registered person. And IGST will be charged. Example: transportation of goods by unregistered person. Mr. Sharma, in Bangalore, is transferring his car by rail freight to Mumbai. He puts up the car in Bangalore station. Supply of services, transporting goods. Place of supply will be Karnataka. Location at which such goods are handed over for their transportation. And CGST plus SGST will be charged. As Indian Railways have a pan-India presence and are registered in all states. So, that is all for this topic. Today we shall be discussing the concept of place of supply for services on board a conveyance. For supply of services on board a conveyance, place of supply will be location of the first scheduled point of departure of that conveyance for the journey. Example 1. Vimana Air, registered in West Bengal, has a flight from Guwahati, Assam, to Chennai stopping at Kolkata and Bangalore. Ms. Anita boards the flight at Kolkata, destination Bangalore. Air crew is present on board serving food to passengers and taking care of their safety. Supply of service, serving food passengers and safety measures. Place of supply, Guwahati, Assam. Location of the first point of departure of that plane. IGST will be levied since this branch of Vimana Air is registered in West Bengal. Today, we shall be discussing the concept of place of supply in case of transportation of passengers. When service of transportation of passengers is provided to a registered person, place of supply will be location of such person, receiver. Example: Akash Electronics, registered in Bangalore, purchased corporate flight tickets from Bangalore to Delhi from Happy Air Travels Limited's Delhi branch. Supply of services, transporting passengers. Place of supply will be Karnataka. Location of registered person. And IGST will be charged. Since this branch of Happy Travels is registered in Delhi, most airlines are registered in all states. When service of transportation of passengers is provided to an unregistered person, place of supply will be location where the passenger embarks or starts on the conveyance for a continuous journey. If point of embarkation is not known, then place of supply be location of the recipient, if the address is available on record, and location of the supplier of services, in other cases. Example: Ms. Anita books a two-way air journey from Bangalore to Kolkata. She leaves Bangalore on 1st August and lands in Kolkata the same day. She leaves Kolkata on 7th August and comes back to Bangalore the same day. She booked the return journey tickets in Bangalore at the same time. For the flight from Bangalore to Kolkata, place of supply will be Bangalore. Since she is unregistered, the location where she embarks the journey becomes place of supply. And CGST and SGST will be charged. For the flight From Kolkata to Bangalore, place of supply will be Kolkata, and IGST will be charged. Note: for the purposes of passenger transport, the return journey shall be treated as a separate journey, even if the tickets for onward and return journeys are issued at the same time. So, that is all for this topic. Today we shall be discussing the concept of place of supply for import and export of services. If services of import and export is provided to any person, then place of supply shall be the location of the recipient of the services. If the location of the recipient is not available, then the place of supply shall be the location of the service provider. Specific services: import and export. Services for goods which must physically available to the service provider, or someone on his behalf, is provided to any person, and place of supply shall be location where the services are actually performed. Example: Boeing, U.S., sends an engineer to Delhi to repair Air India Boeing aircrafts. Place of supply will be Delhi. IGST shall be levied. Services are provided from a remote location by electronic means to any person, then the place of supply shall be the location where goods are situated at the time of supply of services. Example: Boeing engineer, U.S., provides services from USA to Delhi through the Internet. Place of supply shall be Delhi. The above clause will not apply in the case of services supplied for goods temporarily imported into India for repairs and are exported after repairs without being used in India. Example: a Land Rover was brought to Delhi from UK for repairs. Later it was sent back to UK. Place of supply shall be Delhi. Services which require the physical presence of the recipient with the service provider, then place of supply shall be location where services are actually performed. Example: a gym trainer from US came to Mumbai to train actors for a movie. Place of supply shall be Mumbai. Services supplied directly in relation to an immovable property, including services of experts and agents, supply of accommodation by a hotel, n. grant of rights to use immovable property, services for carrying out or coordination of construction work, including that of architects or interior decorators. Place of supply shall be where the immovable property is located or intended to be located. Example: an architect from France was hired by developers, Mumbai, to design a building in Pune. Place of supply shall be Pune. Services of admission to an event or a celebration, conference, exhibition, etc. Organization of an event or a celebration. Place of supply shall be the place where the event is actually held. Example: Mr. Derek from Singapore were hired to organize a business event for an Indian company in Singapore. Place of supply shall be Singapore. Today, we shall be discussing the concept of place of supply for telecommunication services. If services of fixed telecommunication line, leased circuits, internet leased circuits, cable, or dish antenna is provided to any person, then place of supply will be the location where the telecommunication line, dish antenna, etc. is installed. Example: Mr. A.J., Karnataka, takes a DTH from Tata Sky, registered in Karnataka. Place of supply will be Karnataka, and CGST plus SGST will be levied. If the services of post-paid mobile connection and internet services is provided to any person, then place of supply will be the billing address of the recipient, as per the record of the service provider. Example: Mrs. Anita takes a post-paid connection of Airtel, registered in West Bengal, and registers her parents' address as billing address. She moves to Bangalore, but does not change the connection or update her address. Place of supply will be West Bengal. CGST and SGST will be levied. If the services of prepaid mobile connection and internet services, through vouchers, direct recharge, etc., is provided through a selling agent, or reseller, or distributor, or e-charge voucher, to any person, then place of supply will be address of the selling agent, or reseller, etc., as per the record of the supplier. Example: Mr. A.J., Gujarat, goes to Mumbai and buys an Airtel recharge voucher from Juhu Traders, Maharashtra. Place of supply will be Maharashtra. CGST and SGST will be levied. If the services of online prepaid recharges, internet banking, or other electronic mode of payment is provided to any person, then place of supply will be recipient of services, on the record of the supplier of services. Example: Mr. AJ, Gujarat, goes to Mumbai and recharges his Airtel mobile online from Mumbai. Place of supply will be Gujarat. CGST and SGST will be levied. So, that is all for this topic. Today, we shall be discussing the concept of place of supply for banking and financial services. If services of banking, other financial services, stockbroking services is provided to any person, then place of supply will be location or address of the recipient, as per the records of the service provider. If address is not available, location of service provider. Example: Mr. AJ, Gujarat, withdraws money from SBI ATM in Gujarat. Place of supply will be Gujarat. CGST and SGST will be levied. Mr. AJ, Gujarat, withdraws money from SBI ATM in London. Place of supply will be Gujarat. Location or address of the recipient, as per the records of the service provider. IGST will be levied. Mr. Tom from London visits Mumbai and withdraws money from SBI ATM using his Barclays card. Place of supply will be Maharashtra. Address is not available, location of the service provider. CGST and SGST will be levied. If insurance services is provided to registered person, then place of supply will be location of such person. Registered recipient. If insurance services is provided to unregistered person, then place of supply will be location of the recipient, as per the records of the service provider. Example: Director of Akash Electronics, Gujarat, visits SBI, Maharashtra, and opts for accidental insurance for employees. Place of supply will be Gujarat, and IGST will be levied. Mr. AJ, Gujarat, takes a fire insurance for his home from Bajaj Insurance, Gujarat. Place of supply will be Gujarat, and CGST and SGST will be levied. So, that is all for this topic. Today, we shall be discussing the concept of time of supply for goods. When invoice is issued, time of supply is earliest of date of issue of invoice, date of receipt of payment. Example: X sold goods to Y for 100,000 rupees. Invoice is issued on January 15, 2021. Goods are supplied on January 20, 2021. Payment is received on January 31, 2021. Time of supply is January 15, 2021. When invoice is not issued, time of supply is earliest of last day by which invoice should have been issued, date of receipt of payment. Example: X sold goods to Y for 100,000 rupees. Goods are supplied on January 20, 2021. Payment is received on January 31, 2021. Time of supply is January 20, 2021. So, that is all for this topic. Today, we shall be discussing the concept of time of supply for services. When invoice is issued, time of supply is earliest of date of issue of invoice, date of receipt of payment. Example: A provided services to B for 20,000 rupees. Invoice issued on January 20, 2021. Services provided on January 1, 2021. Payment received on February 1, 2021. Time of supply of service January 20, 2021. When invoice is not issued, time of supply is earliest of date of provision of service, date of receipt of payment. Example: A provided services to B for 20,000 rupees. Services provided on January 1, 2021. Payment received on February 1, 2021. Time of supply of service January 1, 2021. So, that is all for this topic. Today, we shall be discussing the concept of time of supply under reverse charge. In case of goods, time of supply is earliest of the date of receipt of goods, date on which the payment is entered in the books of accounts of the recipient, or the date on which the payment is debited in his bank account, whichever is earlier. Date immediately following 30 days from the date of issue of invoice by supplier. Example: A supplied goods under RCM to B for 20,000 rupees. Invoice issued by supplier on January 20, 2021. Receipt of goods, by B, is on January 20, 2021. Payment is made by A, February 1, 2021. Date of receipt of goods, January 20, 2021. Date of payment made, February 1, 2021. Date, immediately following 30 days, from the date of issue of invoice, by supplier, February 19, 2021. Time of supply, January 20, 2021. In case of services, time of supply is earliest of date of payment, as entered in the books of account of the recipient, or the date on which the payment is debited in his bank account, whichever is earlier. Date, immediately following 60 days, from the date of issue of invoice, by supplier. Example: A provides services under RCM to B for 20,000 rupees. Invoice issued by supplier, January 20, 2021. Payment is made on February 1, 2021. Date of payment made, February 1, 2021. Date, immediately following 60 days, from the date of issue of invoice, by supplier, March 21, 2021. Time of supply, February 1, 2021. So, that is all for this topic. Today we shall be discussing the concept of place of supply when there is no movement of goods. In case of supply not involving movement of goods either by the supplier or the recipient, place of supply will be location of such goods at the time of the delivery to the recipient. Supply involving assembling or installing of goods at site, place of supply will be place of such installation or assembly. Example 1. Sales Heaven Limited, Chennai, opens a new showroom in Bangalore. It purchases a building for showroom from ABC Realtors, Bangalore, along with pre-installed workstations. Place of supply will be Bangalore. CGST and SGST will be charged. There is no movement of goods, so the place of supply will be the location of such goods at the time of delivery, to the receiver. Example 2. When goods are installed. Strong Iron and Steel Limited, Jharkhand, asks MS SAS Constructions, West Bengal, to build a blast furnace in their Jharkhand steel plant. Place of supply will be Jharkhand. CGST and SGST will be charged, although MS SAS is in West Bengal. The goods, blast furnace, is being installed at site in Jharkhand, which will be the place of supply. Note, MS SAS will have to be registered in Jharkhand to take up this contract. They can opt to register as a casual taxable person, which will be valid for 90 days, extendable by 90 days more, on basis of a reasonable cause. Today we shall be discussing the concept of place of supply for online information database access and retrieval services. What is an OIDAR service? Both the following conditions must be satisfied to be a OIDAR service. If one is not satisfied, the service is not OIDAR. Delivery is mediated through Internet. The supply is essentially automated, involving minimal human intervention, and impossible without information technology. Examples of OIDAR services: advertising on Internet, providing cloud services like Google Drive, provision of e-books, movie, music, software, and other intangibles via Internet like Hotstar, Amazon Prime Video, providing data or information, retrievable or otherwise, to any person, in electronic form through a computer network. Online game streaming. Place of supply for OIDAR services shall be location of the recipient of services. Special provision, in case of a service provider outside India and a non-taxpayer in India. Supply of online information and database access or retrieval services by any person located in a non-taxable territory to a non-taxable online recipient, then supplier of services located in a non-taxable territory shall be liable to pay GST. Example 1. A student in India registers in Netflix, US, for watching movies. Netflix becomes liable to register in India and pay GST. What happens where the OIDAR service provider supplies services through an intermediary? If an intermediary located outside India arranges or facilitates the supply of OIDAR services from the service provider to the non-taxable online recipient, then the intermediary will be deemed to be the recipient of such services. But if the intermediary satisfies the following conditions, then it will not be considered as a recipient. A. The invoice issued by the intermediary clearly identifies the service and its supplier in non-taxable territory. B. The intermediary neither collects or processes payment in any manner nor is responsible for the payment between the non-taxable online recipient and the supplier of such services. C. The intermediary does not authorize delivery. D. The general terms and conditions of the supply are set by the service provider and not by the intermediary. Applicability of GST for OIDAR services. If location of supplier of services in India and location of recipient of service is also in India, then forward charge will be applicable in GST. Example 2. Hotstar registered in India allows Indian users to register and watch movies. GST is payable by the Indian users. If location of supplier of service is outside India and location of registered recipient of service is India, then reverse charge will be applicable in GST. Example 3. An Indian company registered asks Bluehost, US, for web hosting services. GST is payable by the Indian company under RCM. If location of supplier of service is outside India and location of unregistered recipient of services in India, then forward charge will be applicable in GST. Example 4. A student in India registers in Netflix, US, for watching movies. Netflix has to pay IGST. If location of supplier of services in India and location of recipient of services outside India, it will be treated as export of services. GST will not be applicable. Example 5. Hotstar allows foreigners to register and watch movies. GST is not applicable as it is an export of service. If location of supplier of services outside India and location of recipient of services outside India, it is not covered under GST. Example 6. Netflix, US, provides online movie streaming services to people in US. This is not covered in Indian GST. Who will register and pay GST for OIDAR services when the service provider is located outside India? In respect of import of OIDAR services by unregistered, non-taxable recipients, the supplier located outside India will be responsible for payment of taxes. The service provider will be required to take a single registration for paying IGST under the simplified registration scheme to be notified by the government. Either he will have to take registration or he will have to appoint a person in India to pay GST. Does reverse charge apply in OIDAR services? The person receiving any such services, like OIDAR, should pay the IGST to the government only if he is registered under GST as a taxable person. Why does OIDAR service require a treatment different from other services? The peculiarity of OIDAR service is that it can be provided online from a remote location outside India. If a similar service is provided by an Indian service provider from India to recipients in India, then such service would be taxable. If such services are received by a registered entity in India, then GST will be payable under reverse charge. Today we shall be discussing the concept of place of supply when goods are supplied on a vessel or conveyance. Supply involving goods on board a conveyance, including a vessel, an aircraft, train or a motor vehicle. Place of supply will be the location at which such goods are taken on board. Example of goods supplied on a plane. Mr. AJ is traveling from Mumbai to Delhi by air. He purchases coffee and snacks while on the plane. The airlines is registered in both Mumbai and Delhi. The food items were loaded into the plane at Mumbai, so place of supply becomes Mumbai. CGST and SGST will be charged. Example of goods supplied on a train. Mr. Vinod is traveling to Mumbai via train. The train starts at Delhi and stops at certain stations before Mumbai. Vinod boards the train at Vadodara, Gujarat, and promptly purchases lunch on board. The lunch had been boarded in Delhi. The food items were loaded into the train at Delhi, so place of supply becomes Delhi. CGST and UTGST will be charged. Today we shall be discussing the concept of place of supply where there is movement of goods. GST is a destination-based tax. The goods will be taxed at the place where they are consumed and not at the origin. So, the state where they are consumed will have the right to collect GST. When supply involves movement of goods, whether by the supplier, or the recipient of goods or by any other person, place of supply will be the location of the goods when the movement of goods terminate, for delivery to the recipient. When goods are delivered by the seller to a recipient on the direction of a third person, before or during movement of goods, by way of transfer of documents of title to the goods or some other way, it is assumed that the third person has received the goods, and the place of supply will be the principal place of business of a third person. Example for intrastate sales. Mr. Raj of Mumbai, Maharashtra sells 10 TV sets to Mr. Vijay of Nagpur, Maharashtra. The place of supply is Nagpur, in Maharashtra. Since it is the same state, CGST and GST will be charged. Example for interstate sales. Mr. Raj of Mumbai, Maharashtra sells 30 TV sets to Mr. Vinod of Bangalore, Karnataka. The place of supply is Bangalore in Karnataka. Since it is a different state, IGST will be charged. Example, deliver to a third party as per instructions. Mr. Anand in Lucknow buys goods from Mr. Raj in Mumbai, Maharashtra. The buyer requests the seller to send the goods to Nagpur, Maharashtra. In this case, it will be assumed that the buyer, in Lucknow, has received the goods and IGST will be charged. Place of supply, Lucknow. Example, when receiver takes the goods ex-factory. Mr. Raj of Mumbai, Maharashtra gets an order of 100 TV sets from Sales Heaven Limited of Chennai, Tamil Nadu. Sales Heaven mentions that it will arrange its own transportation and take TV sets from Mr. Raj ex-factory. Place of supply will be Chennai, Tamil Nadu, and IGST will be charged. Example, e-commerce sale. Mr. Raj of Mumbai, Maharashtra orders a mobile from Amazon to be delivered to his mother in Lucknow, UP as a gift. Ms. ABC, online seller registered in Gujarat, processes the order and sends the mobile accordingly, and Mr. Raj is billed by Amazon. It will be assumed that the buyer in Mumbai has received the goods and IGST will be charged. Place of supply will be Mumbai, Maharashtra, and IGST will be charged. Today we shall be discussing the valuation concept where consideration is not wholly in money. Valuation of supply under GST will be open market value of such supply. OMV will be the amount which is fairly available in open market. If the OMV is not available, the monetary value of partial consideration will be added to monetary consideration, to sum up to total consideration. If the value is not determinable under the points above, taxable person can refer to similar goods or services or both for determining the value of supply. If the value is not determinable under all the above clause, the value shall be the sum total of consideration in money, and such further amount of money that is equivalent to consideration not in money as determined on the basis of cost method or residual method. Example 1. Where a new TV is supplied for 20,000 rupees along with the exchange of an old TV, and if the price of the new TV without exchange is 24,000 rupees, the open market value of the new TV is 24,000 rupees. Example 2. Where a laptop is supplied for 40,000 rupees along with a barter of printer that is manufactured by the recipient, and the value of the printer known at the time of supply is 4,000 rupees, but the open market value of the laptop is not known. The value of the supply of laptop is 44,000 rupees. Today we shall be discussing the concept of valuation of supply of goods or services between related persons under GST. Business entities which may have separate legal existence while sharing a common control fall under the definition of related person under GST law. For instance, Tata Steel and Tata Motors are both considered separate legal entities under Tata Sons, even though the former supplies inputs to the latter. Value of supply shall be the open market value, OMV, of such supply. OMV will be the amount which is fairly available in open market. If the open market value is not available, the taxable person can use as reference similar goods or services or both for determining the value of supply. If the value is not determinable in the above two cases, it shall be determined by either by the cost method or residual method. If the recipient of goods or services both is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value of goods or service. Tata Steel supplies goods worth 150,000 rupees, which is the OMV of the goods, to Tata Motors for 100,000 rupees, and Tata Motors claims the full amount of GST charged in the invoice, which is 18,000 rupees, at 18% of 100,000 rupees, as input tax credit. The invoice value, 100,000, will hold true for valuation purpose. Eventually, when Tata Motors sell their products to their end consumers, they will only get input credit of what was paid earlier, as tax 18,000 rupees, and not the tax that should have been paid if the goods were sold at OMV. Today we shall be discussing the concept of valuation of supply under cost method, where the value of a supply of goods or services or both is not determinable by any of the preceding rules. The value shall be 110% of the cost of production or cost of manufacturing or cost of acquisition of such goods or cost of provision of such services. Example: Nilkamal Limited is manufacturing office chairs and the cost of manufacturing is 4,000 rupees per chair. Similar chair in open market is valued at 4,500 rupees. These chairs are supplied to a furniture showroom at the rate 3,000 rupees and balance in non-monetary consideration. Now, since the open market value is available, 4,500 rupees will be considered for the valuation of supply. However, in case if open market value is not available, the value of supply as per cost method will be followed, which says it has to be 110% of the cost of manufacturing 4,000 rupees. 110% equals 4,400 rupees. Thus GST will be charged on 4,400 rupees in this case. So, that is all for this topic. Today we shall be discussing the concept of valuation of supply for principal to agent or vice versa. Meaning of principal. Principal means a person on whose behalf an agent carries on the business of supply or receipt of goods or services, or both. For instance, a dealership store of an automobile company is an excellent example of principal-agent relationship. Meaning of agent. Agent means a person, including a factor, broker, commission agent, arhatia, term used in local markets, del credere agent, an auctioneer or any other mercantile agent, by whatever name called, who carries on the business of supply or receipt of goods or services or both on behalf of another. A del credere agency is a type of principal-agent relationship, wherein the agent acts not only as a salesperson or broker for the principal, but also as a guarantor of credit extended to the buyer. Value of supply will be open market value, or 90% of the price charged for the supply of goods of like kind and quality, by the recipient to his customer not being a related person, where goods are intended for further supply by the said recipient. In case if it cannot be determined, on the basis of the rule above, the value shall be determined, on the basis of cost method or residual method. Example: let's assume that the principal Mr. X supplies groundnuts to his agent. The agent Mr. Y supplies groundnuts of like kind and quality and subsequent supplies at a price of 5,000 rupees per quintal on the day of supply. Another independent supplier Mr. Z is supplying groundnuts of like kind and quality to the said agent at the price of 4,550 rupees per quintal. The value of the supply made by the principal Mr. X shall therefore be 4,550 rupees per quintal, the open market value of groundnuts, or, where he exercises the option, the value shall be 90% of 5,000 rupees is 4,500 rupees per quintal. Today we shall be discussing the concept of valuation of supply under residual method, where the value of supply of goods or services or both cannot be determined under the cost method. The same shall be determined using reasonable means consistent with the principles and general provisions of the Goods and Services Tax Law. Supplier can use any method to determine the value of supply under GST, provided such method is justifiable in the case of inquiry. The registered taxable person should not exploit this method to displace the GST liability, as the penal provisions are strict under the new indirect tax regime. Example. One example of the residual method is valuation on the basis of per unit when the cost of manufacturing cannot be determined in principle. The number of man-hours required to complete a job can be another example of such valuation method. Today we shall be discussing the concept of inclusions and exclusions from taxable value. GST will be charged on the transaction value. Transaction value is the price actually paid or payable for the supply of goods services between unrelated parties. Price is the sole consideration. Inclusions: any taxes, duties, cess, fees, and charges other than GST, if charged separately. Amount paid by recipient for supply on behalf of supplier. Incidental expenses such as commission and packing, including amount charged for anything done by supplier at or before delivery of goods. Interest, late fee or penalty for late payment. Value of subsidies linked to supply excluding subsidy by central or state government. Exclusions: discount given on or before time of supply, and recorded in tax invoice. After supply but it was known before, at time of supply, and can be linked to relevant invoice. Today we shall be discussing the concept of treatment of discounts under GST. If discount is given on or before time of supply and recorded in tax invoice, it will be allowed as deduction from transaction value. Example 1. XYZ is a dealer of cars. XYZ now sells the automobile to a customer for 7 lakhs, offering a 10% discount. To encourage prompt payment, XYZ offers additional 5% discount if customer pays within 7 days. Discount of 10% 70,000 is mentioned in invoice, resulting in net transaction value of 6 lakhs 30,000. However, discount of 5% is not deducted in the invoice because it will be given at the time of payment, which is known at the time of supply but not certain, as it is dependent upon payment. So it may be allowed to be deducted from the transaction value. For this, XYZ Limited will issue a credit note to customer for 40,320. 5% of 6,30,000 equals 31,500 plus GST at 28% on 31,500 equals 8,820, and this must be linked to the relevant tax invoice. If discount is given after supply but it was known before or at time of supply, and can be linked to relevant invoice, it will be allowed as deduction from transaction value. If discount is given after supply but it was not agreed upon before, or at time of supply, whether or not traceable to relevant invoice, it will not be allowed as deduction from transaction value. Example 2. XYZ offers a cashback scheme in January 2020 where a discount of 25,000 is allowed for all the vehicles booked and sold during December 2019. In such a case, discount is announced and given after the supply was made and was not known at the time of supply. Also, it could not feature in tax invoice as it was not known at the time of supply. Hence, the invoice value will not be netted off with such cashback incentive. Today, we shall be discussing the concept of ITC on employee benefit expenses. ITC is not available on supply of food and beverages. Exception: if the category is same for the inward supply and outward supply, or it is a part of the mixed or composite supply, where it is mandatory for business by any law in force to provide such services to its employees. Example: VJ Enterprises arranges for an office party for its employees. It enters into an agreement for supply of food and beverages with Mr. AJ, Catering services. Further, AJ Catering enters into subcontract for supply of desserts with Kishore Catering Services. ITC is available to AJ Catering Services. ITC is not available to VJ Enterprises. Example: Maruti Suzuki enters into an agreement for organizing an event for its distributors, along with catering with Gstr Classic. ITC is available to Maruti Suzuki, as Gstr is giving a composite supply of goods and services. Travel benefits. ITC is not available in the case of travel benefits extended to employees on vacation, such as leave or home travel concession. ITC is not available on travel holiday package given to the employees. ITC is available on travel expenses by director or employees for business purposes. Membership of a club, health and fitness center. ITC is not available on any membership fees for gyms, clubs, given by employer to employee. If company pays the membership fees of club taken by MD, then ITC will not be available to the company or Mr. MD. Exception, where it is mandatory for business by any law in force to provide such services to its employees. Rent a cab, life insurance, health insurance. ITC is not available for rent a cab, health insurance and life insurance. Exceptions. 1. ITC would be admissible where it is obligatory for an employer to provide such supplies to its employees under any law for the time being in force. Assuming the government passes a rule for all employers to provide mandatory cab services to female staff in night shifts. ABC Limited hires a rent-a-cab to provide the transportation to its female staff on night shifts. Then ITC will be available to ABC Limited on the GST paid to the rent-a-cab service. ITC is available if insurance is taken to fulfill government obligation. ITC is eligible for employee accident insurance as it does not fall under the category of health or life insurance. 2. If the category is same for the inward supply and outward supply, or it is a part of the mixed or composite supply. XYZ Travels can claim ITC for taking the car on rent from ABC Travels. Rulings R. Gujarat held that GST would be levied on recovery of amount from employee on account of third-party canteen services provided by a company to their employees, which is obligatory under Factory Act. R. Gujarat held that an employee exiting company without completing their notice period would be liable to pay 18% GST on the recovery of the pay. So, that is all for this topic. Today, we shall be discussing the concept of ITC on capital goods and its reversal. Capital goods are assets such as buildings, machinery, equipment, vehicles and tools that an organization uses to produce goods or services. For example, a blast furnace used in iron and steel industry is a capital asset for the steel manufacturer. If depreciation is claimed on the GST paid while purchasing the capital asset, ITC is not allowed. If capital asset used only for personal use, only for exempted sales, only for non-business purposes, then ITC will not be allowed. If capital asset used only for normal taxable sales, including zero-rate sales, then ITC will be allowed. If capital assets used partly for personal or exempted sales and normal taxable sales, then calculate proportionate ITC. The useful life of capital goods are taken to be 5 years from the date of invoice. Capital goods sent on job work. ITC will be allowed to the principal manufacturer if a capital asset has been sent to a job worker for job work. Condition: such goods must be received back within a period of 3 years of being sent out. Implications: if the goods are not sent back within 3 years, it shall be treated as a deemed supply from the date of sending the goods, and tax would be payable, along with interest, for late payment of taxes. Reversal of ITC on capital goods. Variable used. Formulae, or explanation. DM. DC divided by 60. Amount of ITC, attributable to a tax period, a month, on common capital goods, during their useful life. DR. Aggregate DM, of all those capital goods, which have useful life remaining. at the beginning of the tax period. TE. This is the common credit, attributable towards exempted supplies, which is calculated as follows. E divided by F, times Dr. Where E is aggregate value of exempt supplies, made during the tax period. F is total turnover, in the state of the registered person, during the tax period. Example. A company operating in Karnataka, had availed the following ITC, on various capital goods, purchased in the month of July, 2019. ITC on Machine A, used exclusively, in supply of exempt goods. 150,000 rupees. ITC on Machine B, used exclusively, in supply of taxable goods. 900,000 rupees. ITC on Machine C, used exclusively, for non-business purposes. 20,000 rupees. ITC on Machine D, used partly, in supply of taxable and exempt goods. 450,000 rupees. The company had also made the following type of output supplies in Karnataka in the month of July. Turnover in relation to exempt supplies, 2 million rupees. Turnover in relation to taxable supplies, 8 million rupees. Answer. ITC on Machine A and C will not be credited to the electronic credit ledger. 150,000 rupees plus 20,000 rupees equals 170,000 rupees. ITC on Machine B will be credited to the electronic ledger. 90,000 rupees. ITC on Machine D will also be credited to the electronic credit ledger. PC equals 450,000. TM equals DC divided by 60 equals 7,500. Which is also TR, in this case. ITC, to be reversed, for the month of July, 2019 would be TE equals E divided by F, times TR, equals 2 million divided by 8 million, times 7,500 equals 1,875. So, that is all for this topic. Today we shall be discussing the concept of ITC on sales promotion exp. ITC is not available on purchase or manufacture of goods, distributed as free samples and gifts irrespective of whether used or not in the course or furtherance of business. No output GST is to be paid on such transfer. Free samples are distributed free of cost marked not for sale and MRP is not printed. Gift is voluntary transfer by one person to another without consideration. Certain conditions goods manufactured as free samples and then distributed. No output tax is payable and ITC has to be reversed. Goods manufactured as normal goods and then transferred as free samples. No output tax is payable and ITC has to be reversed. Goods manufactured as free samples and then distributed to related party. Output tax is payable and ITC is allowed. Free supply without any consideration. No output tax is payable and ITC has to be reversed. Advance rulings. R. Maharashtra, disallowed ITC on expenses incurred towards promotional schemes of a loyalty program and goods given as brand reminders since the items are not offered by the applicant, under any contractual obligation as no contract or agreement has been signed by customers in writing accepting the scheme, floated by the applicant. R. Karnataka, held that the taxpayer is not eligible to avail ITC on the inward supplies of goods and services, given as incentives in the form of gifts of goods and services to its dealers. R. Karnataka, held that the ITC can be availed on the distribution of promotional products to distributors or franchisees free of cost as a promotional activity. R. Maharashtra, ruled out that ITC shall not be available to the supplier on the distribution of gold coins as these were distributed as gift without any consideration. Today we shall be discussing the concept of GST on samples. Samples procurement. If samples are procured from registered domestic vendor at concessional price, or if samples are procured from unregistered domestic vendor at full price, then treatment will be Alternative 1. Treat as normal purchase and add in stock. Pay GST under reverse charge and claim ITC after payment. Alternative 2. Treat expense as sample expense. Pay GST under reverse charge and claim ITC after payment. Take ITC on GST paid for samples. If samples are procured from outside India import, then treatment will be: Alternative 1. Add in sample stock. Take credit of IGST paid on import. Alternative 2. Book expense as sample expense. Take credit of IGST paid on import. Samples sold. If free samples are sold to domestic vendors, then tax invoice has to be issued. GST on sample to be paid to government. Sales price will be value on which GST will be payable. Book sample expense in books. Sample expense account debit. To sales. To CGST payable. To SGST payable. To IGST payable. If paid samples are sold to domestic vendors, then tax invoice has to be issued. GST on sample price to be paid to government. Value charged for sample will be the value on which GST will be payable. Book sample expense in books. Sample expense account debit. To sales. To CGST payable. To SGST payable. To IGST payable. If samples are exported, then export invoice has to be issued. No GST if exported under lot or bonds. Otherwise pay and claim refund of IGST. Book sample expense in books. Sample expense account debit. To sales account. Today, we shall be discussing the concept of reversal of ITC on inputs. Reversal of ITC. It means the credit of inputs utilized earlier would now be added to the output tax liability, effectively nullifying the credit claimed earlier. Depending upon when such reversal is done, payment of interest may also be required. Specific credit. ITC, that can specifically be attributable to a supply, either taxable, non-taxable, or supply consumed for personal use. ITC is available if it is directly attributable to a particular taxable supply. ITC has to be reversed if directly attributable to a particular supply that is non-taxable or used for personal consumption. Common credit. ITC, amount that cannot be attributable to a specific supply, but is used for partly making both the taxable and non-taxable supplies, or supplies used for personal consumption. Taxpayer must identify and reverse the proportionate ITC amount to the extent of supplies that are non-taxable or used for personal consumption. The remaining ITC left is eligible for claim. When is reversal done? Circumstances. When is ITC reversal required? The recipient fails to pay consideration to the supplier, whether fully or partly, for a particular supply, within 180 days from the date of issue of invoice. Depreciation, under the Income Tax Act, has been claimed on the GST component of capital goods purchased. Reversal is required at the time of closing books of accounts for that year. Inputs have been used to make an exempt supply on a periodic basis, monthly, or yearly, using a formula given below for common credits. If inputs are exclusively used for making exempt supply, then reverse it as and when identified to have been claimed. Inputs have been used for manufacturing supplies, some of which were used for non-business purposes. On a periodic basis, monthly, or yearly, using a formula given below for common credits. If inputs used are exclusively attributable to a supply used for consumption, reverse such ITC upon identifying as having been claimed. Cancellation of GST registration. While filing Form Reg 16. Reversal of 50% of ITC by banking and other financial companies under special rules. At the time of filing regular returns. Reversal of 5/6 of the ITC taken on gold doors in stock as on January 7, 2017. At the time of supply of either the gold or a bar, or the gold or gold jewelry. ITC has been availed on blocked credits. At the time of filing regular returns, up to the date of filing annual return. Inputs used in goods that were lost, destroyed, stolen, etc. At the time of filing the regular returns, in relation to the month in which such loss had occurred. Inputs used in goods that were given out as free samples. At the time of filing, the regular returns in relation to the month in which such free samples were given out. Reversal of ITC on inputs or input services. Businesses must first segregate the specific credits that are ineligible for claim from the total ITC as follows. Variable used. Formulae or explanation. T. Total input tax paid credit on inputs and input services. T1. Out of T, the specific credit attributable to inputs or input services intended to be used for non-business purposes. T2. Out of T, the amount of input tax attributable to inputs or input services intended to be used exclusively for effecting exempt supplies. T3. Out of T, the amount of input tax deemed as blocked credits. Note: T1, T2, and T3 must be reported in Gstr 3B at summary level for every tax head. Reduce T1, T2 and T3 from the total ITC and derive the common credit as follows. C1. ITC credited to electronic credit ledger. T. D1 plus D2 plus D3. D4. Specific credit on inputs or input services attributable exclusively for making taxable supplies. This would also include zero-rated supplies like exports and supplies to CES. C2. Common credit. C1. D4. ITC on the inputs that is assumed to have been used partly in making taxable supplies and partly in making exempt supplies or used for a non-business purpose. Compute the amount of ITC to be reversed out of the common credit as follows. D1. The ITC attributable towards exempt supplies out of common credit. E divided by F times C2. Where E is aggregate value of exempt supplies during the tax period. F is total turnover in the state of the registered person during the tax period. Turnover means exempt plus taxable value of Gst supplies, including zero-rated and non-Gst supplies, of that state only, excluding tax amounts. D2. Deemed to be ITC, attributable for non-business purposes, out of common credit. 5% of C2. C3. Remaining eligible ITC, out of common credit, calculated separately for CGST, SGST, IGST and Gst. C2, D1 plus D2. Example. Consider the following scenario, for the month of July, 2019, in relation to supplies made in Karnataka. Total ITC available, T, equals 150,000 rupees. ITC, on inputs attributable, to supply used by director, for personal use, T1. 7,500 rupees. ITC, on inputs to be used, exclusively for making exempt supply, D2. 15,000 rupees. Blocked credits. For example, GST portion paid, in respect of taxi service obtained, D3. 4,500 rupees. ITC, on inputs used, exclusively for making taxable supplies, D4. 105,000 rupees. Aggregate value of exempt supplies made in July, E. 225,000 rupees. Total turnover in Karnataka, F. 3 million rupees. Answer. C1 equals T minus T1 plus D2 plus D3. C1 equals 150,000 rupees. Minus 7,500 rupees plus 15,000 rupees plus 4,500 rupees. C1 equals 123,000 rupees. The common credit. C2 equals C1. Minus D4. C2 equals 123,000 rupees. Minus 105,000 rupees. C2 equals 18,000 rupees. D1 equals E divided by F times C2. D1 equals 225,000 rupees divided by 3 million rupees times 18,000 rupees. D1 equals 1,350 rupees. D2 equals 5% of C2. D2 equals 5% of 18,000 rupees. D2 equals 900 rupees. C3 equals C2. Minus D1 plus D2. C3 equals 18,000. Minus 1,350 rupees plus 900 rupees. C3 equals 15,750 rupees. So, out of the originally available ITC, of 150,000 rupees, only C3, 15,750 rupees, and T4, 105,000 rupees, were credited, ultimately to the electronic credit ledger, and D1, 1,350 rupees, and D2, 900 rupees, were required to be reversed. So, that is all for this topic. Today we shall be discussing the Rule 86A, which blocks the ITC under GST. In the recent past, the government has unearthed multiple cases of fraudulent input tax credit being availed, which has caused leakage of revenue of the exchequer. Due to the issuance of fake invoices, issuance of invoice without supply, and other fraudulent activities. In order to prevent such misuse, with effect from December 26, 2019, Rule 86A was inserted in the CGST Rules, 2017. Under this rule, credit ledger can be blocked by an officer, commissioner or officer authorized in his behalf, not below the rank of additional commissioner, can restrict the use of input tax credit from the credit ledger of an assessee in the following circumstances. Where officer has a reason to believe that credit has been fraudulently availed or is ineligible to avail credit. Where credit has been availed on the basis of documents prescribed in Rule 36 of the CGST Rules, invoice, debit notes, bill of entry, by a registered person. Supplier of credit has been found to be non-existent or not to be conducting business from his place of registration. Recipient of credit has been found to be non-existent or not to be conducting business from his place of registration. Non-receipt of goods or services or both. Tax not paid to the government. Credit has been availed without documents. Such officer can unblock the same if conditions for disallowance no longer exist or if 1 year has lapsed from the date of imposition of such restriction. Remedies available to a taxpayer. CGST Act and rules do not provide a remedy to taxpayers for the unblocking of their credit ledger. Petitioners may take recourse to the writ jurisdiction of the Supreme Court and High Courts of competent jurisdiction. Whirlpool Corporation v. Registrar of Trademarks, Mumbai, and/or. Rule 86A is ultravirus to the CGST Act. The Act provides for the provisional taking of credit on a self-assessment basis, and the blocking of credit goes against the scheme of the Act. Rule 86A does not draw validity from any provisions of the CGST Act. The powers prescribed via Rule 86A does not flow from the CGST Act, and hence can be challenged on the ground that it is ultravirus to the CGST Act. Opportunity of being heard. Rule 86A is unilateral as it allows officers to take penal action without giving the assessors an opportunity to be heard. Mahadeo Construction Company v. Union of India. Ksr Enterprises Limited v. State of UP Government. Needs to form standard guidelines and procedures for invoking Rule 86A. The opinion of the officer should not be formed on imaginary grounds or wishful thinking. It should be based on some credible material. If the same is challenged, the officer should be able to disclose the material upon which his belief was formed. MSSS Industries vs. Hoy, 2020, Gujarat. Today, we shall be discussing the concept of job work under GST. Job work. It means processing or working on raw materials or semi-finished goods supplied by the principal manufacturer to the job worker. For example, big shoe manufacturers, principals, send out the half-made shoes, upper part, to smaller manufacturers, job workers, to fit in the soles. The job workers send back the shoes to the principal manufacturer. The principal manufacturer will be allowed to take credit of tax paid on the purchase of goods sent on job work. Goods can be sent to job worker from principal's place of business, directly from the place of supply of the supplier of such goods. ITC will be allowed in both the cases. Effective date for goods sent depends on place of business. Sent from principal's place of business. Date of goods sent out. Sent directly, from the place of supply, of the supplier of such goods. Date of receipt, by job worker. The goods sent, must be received back, by the principal manufacturer, within the following period. Capital goods. 3 years. Input goods. 1 year. In case, goods are not received back, within the period mentioned, such goods, will be treated as, supply from the effective date and tax, will be payable by the principal. Note: value of goods, sent by the principal, will not be included, in the aggregate turnover, of the registered job worker. Accounts and records. The responsibility for keeping, proper accounts for the inputs, or, capital goods, shall lie with the principal. Challan. All goods, sent for job work, must be accompanied by a challan. The challan will be issued, by the principal. It will be issued, even for the inputs, or, capital goods, sent directly to the job worker, invoice to company, by vendor, or, supplier, mentioning bill to company and ship to job worker. The details of challans, must be shown in, Form Gstr, 1. Details of challans, must also be filed through, Form Gst Itc, 04. Form Itc, 04. Form Gst Itc, 04, must be submitted, by the principal every quarter. It must include, the details of challans, in respect of the following: goods dispatched, to a job worker, or received from a job worker, or sent from, one job worker to another. It must be, furnished on, or before 25th day, of the month, succeeding the quarter. For example, for October to December quarter, the due date is, 25th January. Goods sent back. Sale to customer, from job worker's premises. If job worker is registered, same, or, different state. Invoice is issued, by company to customer. If job worker is unregistered, same, or, different state. Invoice is issued, by company to customer. Declaration of, job worker's premises, as additional place of business. Goods sent back, to company by job worker. If job worker is registered, same, or, different state. Original delivery challan. Invoice from job worker, for job work charges. If job worker is unregistered, in different state. Original delivery challan. Invoice from job worker, for job work charges. RCM, will be applicable, on job work charges. If job worker is unregistered, in same state. Original delivery challan. Invoice from job worker, for job work charges. RCM, will be applicable, on job work charges. If amount involved, is more than 5,000 rupees. Goods sent, to another job worker. With the instruction of company. First job worker, is registered. Delivery challan, by company, for second job worker. Delivery challan, by first job worker, to second job worker. First job worker, is unregistered. Delivery challan, by company, for second job worker. Delivery challan, by first job worker, to second job worker. Declaration of, first job worker's premises, as additional place of business. If goods sent, without the instruction of company. No document, to be maintained by company. So, that is all for this topic. Today we shall be discussing the concept of ISD under GST. An input service distributor ISD is a business, which receives invoices for services used by its branches. It distributes the tax paid, to such branches on a proportional basis, in the ratio of the turnover of all such recipients, that are operational during the year. By issuing an ISD invoice, the branches can have different GSTs but must have the same PAN as that of ISD. Situations where ISD is not applicable. ISD cannot distribute the input tax credit. Paid on inputs. Raw materials. Capital goods machine purchased. To outsourced manufacturers or service providers. Example 1 Head Office Bangalore, ISD, incurred annual, software exp. On behalf of all its branches namely, Chennai, Kolkata and Mumbai and received the invoice for the same. Since software is used by all its branches, the input tax credit of entire services cannot be claimed at Bangalore. The ITC has to be distributed to all the 3 locations on a proportionate basis in the ratio of the turnover of all such recipients that are operational during the year. Recovery of excess credit distributed by ISD to recipients. Provisions of demand and recovery gets attracted as if the tax was not paid, in a situation when excess credit has been distributed to any recipient. Recovery of the excess credit distributed along with interest shall be initiated against the recipient and not the ISD. Registration. Input service distributor has to compulsorily register as ISD apart from its registration as a normal taxpayer under the Act. Only then he shall be able to distribute the credit to the recipients. Invoicing. ISD can distribute the amount of tax credit to recipients by issuing an ISD invoice. Distribution of ITC. The credit of tax paid under reverse charge mechanism is not available for distribution to the recipients. So, the ISD has to utilize such credit only as a normal taxpayer. ITC available in a month must be distributed in the same month. So, deferment of the credit distribution is not allowed. Credit attributable to a recipient is distributed even if such recipient is unregistered or making exempt supplies. Returns. Amount of tax credit distributed should not exceed the amount of tax credit available with the ISD as at the end of a relevant month to be filed in Gstr, 6/13 of the succeeding month by ISD. The recipient of the tax credit can view the tax credit so distributed by ISD and Gstr2a that is auto-populated and in turn, can claim the same by filing Gstr2. ISD need not file annual returns. So, that is all for this topic. Today we shall be discussing the concept of interest on delayed refund under Gst. Refund application can be filed under Gst. within a period of 2 years from the relevant date. Once an application for the refund is filed, within 60 days the Gst officer may issue an order. If he is satisfied with the whole or partial refund amount claimed. If the refund is not provided within 60 days of the application by the proper officer, then the refund has to be paid with an interest at 6% per annum, calculated for the period of delay. Exception: if refund from an order direction from the appellate authority court is granted, then interest on refund is 9% calculated for period of delay. To find out the period for which interest at 6% or 9% is to be calculated, count the number of days from the date of receipt of application for refund till the date of payment of refund. Today we shall be discussing the concept of levy of interest on late payment of Gst. The interest has to be paid by every taxpayer who makes a delayed Gst payment. Example: pays Gst after the due date. If excess ITC has been claimed, or excess reduction in output tax has taken place, then interest at 24% has to be paid. Example: a taxpayer fails to make a tax payment of 11,000 rupees for the month of December 2017, where the due date was 20th of January 2018. ITC for the month was 1,000. He makes the payment on 20th of February 2018. Solution: interest for the delay period, 31 days, from 21st January till 20th February, will be calculated as follows. 10,000 rupees into 31 divide by 365. Into 18% equals 153 rupees. The interest has to be calculated from the next day on which tax was due. And now comes the most important questions. Whether interest should be calculated on gross tax liability or net tax liability. So the answer is net tax liability. Example: ITC has to be deducted from output tax liability first, afterwards interest has to be calculated. Today we shall be discussing the concept of payment to vendors after 180 days under Gst, where a recipient fails to pay to the supplier of goods or services, or both other than the supplies on which tax is payable on reverse charge basis. Within a period of 180 days from the date of issue of invoice, ITC availed shall be added to the output tax liability, along with interest at 18%. Example: a purchased goods or availed services worth 118,000 Gst on 1st of March 2019. A received the invoice on 1st of March 2019 and availed the credit in the month of March 2019. A paid to be against the bill on 1st of December 2019. 180 days from the date of invoice is 30th of August 2019. Since A has not paid to the supplier B in 180 days, Rs 18,000 shall be added in his outward liability in Gstr 3B for the month of September 2019 along with interest at 18%, calculated from the date of ITC availed example on 1st of March 2019 to the date of payment on 1st of December 2019. Today we shall be discussing the concept of TDS under GST. Government entities and public sector undertakings are liable to deduct TDS at 2% if the total value of supply under an individual contract exceeds 2,50,000 rupees. The value of supply is to be taken as the amount, excluding the tax indicated on the invoice. No deduction of tax is required when the location of supplier and place of supply is different from the state of the registration of the recipient. A person who is liable to deduct TDS has to compulsorily register, and there is no threshold limit for this. The registration under GST can be obtained without PAN, and by using the existing tax deduction and collection account number, issued under the Income Tax Act. Today we shall be discussing the concept of TCS under GST. TCS is the tax collected by e-commerce operators, such as Amazon, Flipkart etc. from the consideration received by it on behalf of the supplier of goods or services who make supplies through operator's online platform. TCS at 1% will be collected by e-commerce operators while making a payment to the vendors on net taxable supplies. The e-commerce operator liable to collect TCS have to compulsorily register under GST, and there is no threshold limit exemption for it. TCS will be deducted during the month in which the supply is made and shall be deposited within 10 days from the end of the month of supply to the credit of the government. Today we shall be discussing the concept of Gst refund on inverted tax structure. Inverted tax structure means when the input tax rate is greater than tax rate on outward supply. It results into accumulated ITC. Refund is allowed for the same, but no refund if outward supply is nil rated, or fully exempted, or notified supplies. Example. This is a table showing products and their GST. Under finished goods comes fabric bag, which has a GST of 5%, and under raw materials comes non-woven fabric which has a GST of 12%. Maximum amount of refund is calculated by turnover of inverted rated supply of goods and services into net input tax credit divided by adjusted total turnover minus tax payable on such inverted supply of goods and services. The manufacturer purchases non-woven fabric of value 1,000, tax rate 12%, tax amount Rs 120, and supplies fabric bags of output value 1,400, tax rate 5%, tax amount Rs 70. Similarly, purchases silk yarn of value 1,000, tax rate 5%, tax amount Rs 50, and supplies woven fabric of silk with output value 1,500, tax rate 5%, tax amount Rs 75. Here, the silk is exempt under GST. Maximum refund is equal to 1,400 into 120 divided by 1,400 minus 70. Turnover of inverted rated supply of goods. The value of input supply of goods made during the relevant period without the payment of tax bond or letter of undertaking. In the example, it is equals 1,400 rupees. Net input tax credit means ITC availed on inputs during the relevant period other than which refund is claimed under export refund rules. In the example, it is 50 plus 120 minus 50 equals 120 rupees. Adjusted total turnover excludes the value of exempt supplies other than zero-rated supplies. Turnover of supplies in respect of which refund is claimed under export refund rules, if any, during the relevant period. In the above example, it is 1,500 plus 1,400 minus 1,500 equals 1,400 rupees. Relevant period. The period for which claim has to be filled. Tax payable on such inverted supply of goods. the tax amount payable on such inverted rated supply of goods under the same head. That is IGST, CGST, SGST. In the example, it is 1,400 into 5% equals 70 rupees. Process for online filing of refund. Step 1. Log into the GST portal. Go to Services. Refunds. Application for refund. Step 2. Select the refund type, financial year, month. Click on Create. Step 3. Download the offline utility. And fill in the details. And validate the file for uploading. Step 4. Upload the saved file. And validate the Statement 1A on the GST portal. Step 5. On the GST portal, select Click to fill the details of invoices for inward and outward supplies. Step 6. Click on Proceed. Once you get this confirmation message, your statement has been submitted successfully for validation. Step 7. Compute the eligible refund amount to be claimed in Statement 1. And fill in the amount to be claimed as a refund. Step 8. Enter the following details to calculate the eligible refund claim. Turnover of inverted rated supply of goods and services. Tax payable on SOC inverted rated supply of goods and services. Adjusted total turnover. Net input tax credit. Step 9. Select the requisite bank account for getting the credit of the refund amount. Step 10. Preview, verify and submit the refund application. Step 11. After getting confirmation of statement submitted successfully, click on Proceed. Step 12. Affix signature of the authorized signatory to complete filing. Time limit to file. RFD 01A has to be filled within 2 years from the end of financial year in which such claim for refund arises. Today we shall be discussing the concept of Gst refund on exports. When supply is made to says entire supply chain of a particular zero-rated supply is free of GST. Refund can be claimed. Supply on payment of IGST and claim refund of taxes paid. Supply under bond or lot without payment of IGST and claim refund of unutilized input tax credit of CGST, SGST and Gst. Procedure of claiming ITC refund on exports. Time period for claiming refund. Refund claim have to be submitted before the expiry of 2 years from the relevant date. Detail of relevant export invoices as per Gstr1 are punched in GST portal. Data is reconciled with Customs ED that goods were exported out of India. Verification is done by proper officer. Issue of acknowledgement is done within 15 days. Provisional refund of 90% is granted within 7 days from acknowledgement. Balance 10% is granted within 60 days from acknowledgement. Calculate refund amount on exports. Least of the following. Closing balance of ITC before claiming refund. Refund amount equals turnover of zero-rated supply of goods and services. Int net ITC divided by adjusted total turnover. Particulars and amount. Export turnover without payment of tax 48,000. Interstate turnover excluding export turnover 72,000. Output liability 72,000 into 18%, 12,960. Input tax credit taken during the month. IGST 5,280. CGST 5,280. SGST 5,280. Opening balance of credit. Nil. Utilization of ITC as per GST portal. IGST against IGST, 5,280. IGST against CGST, nil. IGST against SGST, nil. CGST against CGST, nil. CGST against IGST, 5,280. SGST against SGST, nil. SGST against IGST, 2,400. Computation of eligible amount of refund of ITC. Particulars, IGST, CGST and SGST. Closing balance of ITC before claiming refund. For IGST, nil, CGST, nil, SGST, 2,800. Maximum refund amount computed as per formula mentioned. For IGST, 48,000 into 5,280 equals 1,20,000. For CGST, 48,000 into 5,280 equals 1,20,000. For SGST, 48,000 into 5,280 equals 1,20,000. That is IGST, 2,112. CGST, 2,112. SGST, 2,112. Eligible amount of refund for IGST, nil. For CGST, nil. For SGST, 2,112. Today we shall be discussing the concept of order of ITC utilization under GST. The given table shows the order of ITC utilization. ITC, on account of IGST, has to be set off against IGST first, and afterwards against CGST and SGST. In any order, in any proportion. Input tax credit on account of integrated tax to be completely exhausted mandatorily. ITC on account of CGST has to be set off against IGST first, and afterwards against CGST. It can't be set off against SGST. ITC on account of SGST has to be set off against IGST first, and afterwards against SGST. It can't be set off against CGST. Example. The table shows output liability and ITC of IGST, CGST, and SGST. First scenario. Set off of unutilized IGST credit completely towards CGST. In IGST, according to the set-off liability given, there is no balance to be paid in cash, or balance credit available. For CGST, no balance to be paid in cash, and balance credit available is 300. For SGST, balance to be paid in cash is 200, and no balance credit available. Second scenario, set off of unutilized IGST credit completely towards SGST. In IGST, according to the set-off liability given, there is no balance to be paid in cash, or balance credit available. For CGST, balance to be paid in cash is 200, and no balance credit available. For SGST, no balance to be paid in cash, and balance credit available is 300. Third scenario, set off of unutilized IGST credit partly towards CGST and SGST liability. In IGST, according to the set-off liability given, there is no balance to be paid in cash, or balance credit available. For CGST, no balance to be paid in cash, and balance credit available is 50. For SGST, no balance to be paid in cash, and balance credit available is 50. Today we shall be discussing the concept of mixed supply under GST. Mixed supply under GST means a combination of two or more goods or services made together for a single price. Each of these items can be supplied separately and is not dependent on any other. Under GST, a mixed supply will have the tax rate of the item, which has the highest rate of tax. For example, a Diwali gift box consisting of canned foods, sweets, chocolates, cakes, dry fruits, aerated drink and fruit juices, supplied for a single price is a mixed supply. All are also sold separately. Since aerated drinks have the highest GST rate of 28%, aerated drinks will be treated as principal supply and 28% will apply on the entire gift box. Example, a free bucket is offered on the purchase of detergent. It is a mixed supply. Since detergent and bucket both can be sold separately. Since detergents have the higher rate, 28%, this rate will apply on the whole mixed bundle. So, that is all for this topic. Today we shall be discussing the concept of high C sales. When the original importer sells the goods to a third person after its dispatch from the port of loading and before the arrival at the port of discharge for customs clearance, such transactions are termed as high C sale transactions. Such transactions are covered under the definition of interstate supply and hence the provisions of the IGST Act apply. There are no restrictions on the same goods being sold more than once on high seas. The same consignment of goods in transit can be sold multiple times before such goods cross customs frontier and enter into the territory of India. IGST on high sea sale transactions shall not be levied, as the supply takes place before filing a bill of entry, and such transactions are exempted from the whole of GST Act. However, IGST in case of import of goods shall be levied at the time of filing a bill of entry. And any value addition accruing in each such IC sale will form part of the value on which IGST is collected at the time of clearance, and the final buyer would be responsible for payment of GST on the full value of goods plus any value addition at time of import. So that is all for this topic. Today, we shall be discussing the concept of Gst implications on deputation and secondment of employees. It is a common practice, especially in group companies, that an employee employed with one company is deputed for work to another company. During such deputation or secondment, such employee works under the direction, supervision, and control of deputed or seconded company, and receives a salary and other benefits as per their policy. However, in many cases, to preserve the continuity of the employment benefits, or to avoid migration pain, in case of cross-border secondment, the entire salary of the said employee is processed and paid by the company who is deputed or seconded its employee, and then such amount is recovered from the deputed or seconded company. The question comes up is whether such recovery amounts to consideration for a supply of manpower service? No. In case of joint employments, services provided by employee to employer in the course of employment does not attract GST. Services by an employee to the employer in the course of or in relation to his employment cannot be considered as supply so as to be leviable to GST. Today we shall discuss eligibility criteria and time limit to avail ITC under GST. Time limit to claim ITC against an invoice or debit note is earlier of below dates. The due date of filing GST return for September of next financial year, or date of filing the annual returns relevant for that financial year. For instance, XY Corp., a buyer has a purchase invoice dated 8th of July 2017, wants to claim GST paid on that purchase, as per the criteria laid down to reckon the time limit. The due date of filing GST return for September 2018 to 20th of October 2018 and the date of filing GST annual return for FY 2017-18 is 31st of December 2018. Therefore, the date is 20th of October 2018 and XY Corp can claim this ITC in any of the months between July 2017 to September 2018. Note: for debit notes, above condition must be considered with respect to the original invoice date. Conditions to claim ITC under GST are: possession of a tax invoice or debit note or document evidencing payment, receipt of goods or services, goods delivered by supplier to other person on the direction of a registered person against a document of transfer of title of goods, furnishing of a return. Where goods are received in lots or installments, ITC will be allowed to be availed when the last lot or installment is received. Failure of the supplier towards supply of goods or services within 180 days from the date of invoice, ITC already claimed by recipient will be added to output tax, liability and interest paid on such tax involved. On payment to supplier, ITC will be again allowed to be claimed. No ITC will be allowed if depreciation has been claimed on the tax component of a capital goods. Today we shall be discussing the concept of remission of duties or taxes on export product. Need of Road TEP scheme. The US had challenged India's key export subsidy schemes in the WTO, World Trade Organization, claiming them to harm the American workers. A dispute panel in the WTO ruled against India, stating that the export subsidy programs that were provided by the government of India violated the provisions of the trade body's norms. The panel further recommended that the export subsidy programs be withdrawn. This led to the birth of the Road TEP scheme, so as to ensure that India stays WTO compliant. Road TEP. The Indian government announced a new WTO compliant scheme called Remission of Duties or Taxes on Export Product, Road TEP, which replaced MES, starting 1 January 2021. Road TEP allows reimbursement of all embedded taxes including local levies paid on inputs by exporters, which are not exempted or refunded under any other existing scheme. Who is eligible? The scheme will enclose all sectors, including textiles, with priority given to labor-intensive sectors, which are enjoying benefits under ME scheme at 2%, 3% or 5% of the export value from 1 January 2021. Both merchant exporters and manufacturer exporters are eligible. SES units and AO units are also eligible to claim benefits. There is no minimum turnover criteria to claim road TEP. Goods exported through e-commerce platforms via courier are also eligible. Country of origin of the exported products should be India. Re-exported products are not eligible. Key features: remission of taxes or duties or levies, automated refund system, speedy clearance through digitalization, scheme for all sectors. Key benefits: being a member of WTO and in compliance with WTO trade norms, Road TEP scheme can provide a seamless flow of economic benefit from the government. In the existing schemes, certain taxes, such as state taxes on power, oil, water and education cess, are not included. Under Road TEP, such taxes are also proposed to be included in the indicative list, making the scheme exhaustive. It will add more competitiveness in the foreign markets, with assured duty benefits by GOI. Being more compliant and transparent with WTO norms, it will help exporters meet international standards and boost business growth. Availing benefits under Road TEP scheme. The IceGate portal, Indian Customs Electronic Gateway, will contain the details regarding the credits availed by the exporter. At the port, the exporter must indicate in the shipping bill the details regarding the claim of the Road TEP benefit, with regard to a particular item of export, and generate a credit script for it. These credit scripts are then used to pay basic customs duties, claim rebates, or can be transferred to other importers, as the case may be. The process for the generation and claiming of scripts under the Road TEP scheme are as follows. The exporter should make a declaration of the claim for Road TEP in the shipping bill. Once the Export General Manifest (EGM) is filed, the claim will be processed by the customs. After processing the claim, a scroll with all individual shipping bills for the admissible amount will be generated and available in the user's account at IceGate portal. The exporter should log into the IceGate portal and create a Road TEP credit ledger account. After the Road TEP credit ledger account is created, the exporters can log into their accounts and generate scripts by selecting the relevant shipping bills. Once the scripts are generated, the refund will be credited and reflected in the exporter's ledger account, and will be available for utilization in payment of the eligible duties and during imports, or for transfer to any other importers. Currently, the rate of duty of remission for the products under Road TEP scheme is not yet notified by the Government of India. Comparison between Road TEP and MES. Aspect: incentive scheme. In MES, incentive on exports of goods in form of transferable scripts. In Road TEP, refund of indirect taxes on inputs used in the manufacture of exported product that are not being currently reimbursed in any other existing schemes. WTO compliant. In MES, non-compliant with WTO trade norms. In Road TEP, compliant with WTO trade norms. Incentive. In MES, 2 to 5% of realized FOB value of exports in free foreign exchange or FOB value of exports as per shipping bill, whichever is lower. In Road TEP, product-based percent way of reward to be notified. Mode. In MES, issued in the form of transferable scripts physical copy. In Road TEP, to be issued in the form of transferable duty credit or electronic script, which will be maintained in electronic ledger. Transferable. In MES, transferable in open market. In Road TEP, transferable in open market. WTO prohibits any direct subsidies to a firm or industry, which are contingent upon export performance. In MES, the basic of calculation of benefits was the FOB value of the export product, thereby making it non-compliant to WTO. WTO does not put any restriction on remission, or rebate of duties, and taxes, which have been built, in cost of the exported products. Today, we shall be discussing the concept of, Rule 86B, Restriction on Input Utilization. ITC, available in the electronic credit ledger, could always be fully utilized, for discharging the output tax liability. The new Rule 86B, has limited the use of ITC balance, for paying its output tax liability. Introduction. CBIC, has introduced new Rule 86B, VID Notification Number 94/2020, dated December 22, 2020 and is made effective from 1st of January 2021. This rule has an overriding impact, on all the other CGST rules. Impact of Rule 86B, on businesses and working capital. The motto behind the introduction of this rule, is to control the issue of fake invoices, to use the fake input tax credit, to discharge liability and eventually curb tax evasion. It restricts fraudsters, from showing high turnovers, without having any financial credibility. Applicability. If taxable turnover, is more than 50 lakhs rupees per month, check the following. Cumulative payment, through e-cash ledger. Equals tax paid through e-cash ledger, from the start of financial year, till the month of return filing, divided by total output tax liability, till the month of return filing, equals less than 1%, Rule 86B is applicable. Greater than 1%, Rule 86B is not applicable. The limit has to be checked, every month before filing each return. Turnover shall exclude, exempt and export turnover. Liability shall exclude, procurements taxable, under reverse charge mechanism, on which tax is payable in cash. If taxable turnover, is not more than 50 lakhs rupees per month, Rule 86B is not applicable. First step. Check turnover. Example. Exempt turnover. Export turnover. Taxable turnover. Rule 86B applicable. Example. 1. Exempt turnover is 3 crore. Export turnover is 2 crore. Taxable turnover is 46 lakhs. Is Rule 86B applicable? No. Example. 2. Exempt turnover is 52 lakhs. Export turnover is 65 lakhs. Taxable turnover is 60 lakhs. Is Rule 86B applicable? Yes. Example. 3. Exempt turnover is 52 lakhs. Export turnover is 65 lakhs. Taxable turnover is 50 lakhs. Is Rule 86B applicable? No. Second step. Calculate cumulative percent of cash paid, with total liability. If first step is yes, then follow second. Month, April. Sales, A. 5,200,000 rupees. GST at 18%, B. 936,000 rupees. Cumulative tax, C. 936,000 rupees. Amount paid, through cash ledger, D. 15,000 rupees. Cumulatively paid, E. 15,000 rupees. Cumulative percent, F equals Z/C. 1.60%, more than 1%. Applicability of Rule 86B. Not applicable. Month. April. Sales, A. 5,200,000 rupees. GST at 18%, B. 936,000 rupees. Cumulative tax, C. 936,000 rupees. Amount paid, through cash ledger, D. 8,000 rupees. Cumulatively paid, E. 8,000 rupees. Cumulative percent, F equals Z/C. 0.85%, less than 1%. Applicability of Rule 86B. Applicable. Example. The said percent has to be applied on cumulative basis. Month, April. Sales, A. 5,200,000 rupees. GST at 18%, B. 936,000 rupees. Cumulative tax, C. 936,000 rupees. Amount paid, through cash ledger, D. 15,000 rupees. Cumulatively paid, E. 15,000 rupees. Cumulative percent, F equals Z/C. 1.60%, more than 1%. Applicability of Rule 86B. Not applicable. Month. May. Sales, A. 7,500,000 rupees. GST at 18%, B. 1,350,000 rupees. Cumulative tax, C. 2,286,000 rupees. Amount paid, through cash ledger, D. 12,450 rupees. Cumulatively paid, E. 27,450 rupees. Cumulative percent. F equals Z/C. 1.2%, more than 1%. Applicability of Rule 86B. Not applicable. Month, June. Sales, A. 8,500,000 rupees. GST at 18%, B. 1,530,000 rupees. Cumulative tax, C. 3,816,000 rupees. Amount paid, through cash ledger, D. Cumulatively paid, E. 27,450 rupees. Cumulative percent. F equals Z/C. 0.71%, less than 1%. Applicability of Rule 86B. Applicable. Month. July. Sales, A. 4,400,000 rupees. GST at 18%, B. 792,000 rupees. Cumulative tax, C. 4,608,000 rupees. Amount paid, through cash ledger, D. Cumulatively paid, E. 27,450 rupees. Cumulative percent. F equals Z/C. 0.59%, less than 1%. Applicability of Rule 86B. Not applicable, as sale is less than 50 lakhs rupees. Today, we shall be discussing the concept of Rule 86B, restriction on input utilization, exceptions to the rule. If the registered person, under concern has received a refund of amount, greater than 1 lakh rupees, in the preceding financial year, on account of export, under LUT, or, due to inverted tax structure, where, tax rate on input is, higher than the tax rate on output, resulting into, accumulation of ITC. Example. ABC, Limited, has received, a refund of amount of 2 lakhs rupees, in previous year, on account of export, under LUT. In current year, it has made, a sale of 1 crore rupees of goods, on which tax rate is 12%. It can discharge its liability, up to 100%, through ITC, and Rule 86B is not applicable. Because, it has received an amount, greater than 1 lakh rupees, in the preceding financial year, on account of export under LUT. If the registered person, under concern is any of the following: Government Department, Public Sector Undertaking, Local Authority, Statutory Authority. Example. Indian Oil Corporation Limited, has made a sale of 1 crore rupees of goods, on which tax rate is 12%. In this case, it can discharge its liability, up to 100%, through ITC, and Rule 86B is not applicable. Because, IOCL, is a public undertaking. If the persons, mentioned below have paid, more than 1 lakh rupees, as income tax, under Income Tax Act, 1961, in each of the last 2 financial years, for which the time limit, to file return of income, under subsection 1, of Section 139 of the said Act, has expired. The registered person, proprietor, CARTA, or managing director of the registered person, any of the partners, or whole-time directors, or any other person, as the case may be, to avail relaxation. This condition is to be checked, for last 2 financial year, for which time limit, to file return under Section 139(1) of Income Tax Act has been expired. Time limit should have been expired on the date of filing return under GST. Payment of income tax includes self-assessed tax paid as per normal provisions, or as per MAT provisions, tax deducted or collected. Taxpayer is the person whose tax is deducted or collected. Advance tax excludes tax paid on account of dividend distribution tax, DDT, as per Section 115(0) of Income Tax Act. Interest, or late fees paid. Condition: income tax payment, in excess of 1 lakh rupees, should have been done in last 2 financial years, for which the time limit, to file return under Section 139(1), has been expired. Either by the partnership firm itself, or by any of its 2 partners. Serial number. Example. Discussion. Applicability of 86B. 1. Example. When this condition is fulfilled by firm, in last 2 financial years. Discussion. Since such condition is fulfilled by the said person itself. Applicability of Rule 86B. Not applicable. 2. Example. when this condition is fulfilled by partners. In last 2 financial years, assume 5 partners, named as A, B, C, D, E. Discussion. If such condition is fulfilled by partners A and B for the last 2 years. Applicability of Rule 86B. Not applicable. If such condition is fulfilled by partner A and partner B in 1 year, and partner B and partner C next year. Applicability of Rule 86B. Not applicable. 3. Example. If partner A retires in a subsequent year. Discussion. It shall be deemed as the condition was fulfilled by one of its partners. Applicability of Rule 86B. Not applicable. 4. Example. When this condition is fulfilled by firm in 1 year and by partners in another year. Discussion. Condition should be fulfilled by either firm or any 2 partners in last 2 financial years. Applicability of Rule 86B. Applicable. Company, or the managing director, or all the whole-time directors, WTDs, can fulfill this condition. That is, if company pays income tax greater than 1 lakhs rupees, then others need not satisfy this condition. If MD pays income tax greater than 1 lakhs rupees, then others need not satisfy this condition. If all the WTDs pay income tax greater than 1 lakhs rupees, then others need not satisfy this condition. Today, we shall be discussing the concept of place of supply for services of a movable property. An immovable property is an immovable object, a property that cannot be moved without destroying or altering it. It is fixed to the earth, such as a piece of land or a house. It includes premises, property rights, for example, inheritable building right, houses, land and associated goods, and chattels, if they are located on, or below, or have a fixed address. Supply of service. Place of supply. Directly in relation to an immovable property, including services provided by architects, interior decorators, surveyors, engineers, other experts, or estate agents. Service of grant of rights to use immovable property. Carrying out, or coordination of construction work. Location at which immovable property, boat, or vessel, is located, or intended to be located. Lodging accommodation, in a hotel, club, campsite, etc. Includes houseboat, or any other vessel. Accommodation in any immovable property, for organizing any marriage, official, cultural, social, religious, or business events. Includes services provided, in relation to such function at such property. Services, ancillary to the services, referred above. If immovable property, boat, or vessel, is located outside India, then place of supply shall be the location of the recipient. Examples. Type. Example. Supply of service. Place of supply. Gst. Itc. Type. Construction of immovable property. Example. ABC, Constructors, Gujarat, has been hired by Shanti Properties, Karnataka, to build a commercial building in Mumbai. Supply of service. Works contract by ABC. Place of supply. Mumbai. Place where building is located. Gst. CGST plus SGST. Note. ABC will have to register as a supplier in Mumbai. ITC available as ABC will have to register. Type. Expert services for property. Example. ABC brings in engineers from an engineering firm registered in West Bengal to survey the Mumbai site. Supply of service. Engineering expertise. Place of supply. Mumbai, place where the building is located. Gst. CGST plus SGST. Note. Engineering firm will have to register as a supplier in Maharashtra. ITC available as engineering firm will have to register. Type. Hotel accommodation. Example. Mrs. Bagchi, an architect, registered in Kolkata, lodges in Raj Hotels, in Mumbai. Supply of service. Hotel accommodation by Raj Hotels. Place of supply. Maharashtra, place where the building is located. Gst. CGST plus SGST. ITC. No, ITC, if Mrs. Bagchi is not registered in Mumbai. Type. Business conference, held in a hotel. Example. Akash Electronics, registered in Gujarat, books the conference hall of Raj Hotels in Mumbai for 3 days for an official conference. Supply of service. Hotel accommodation by Raj Hotels. Place of supply. Maharashtra, place where the hotel is located. Gst. CGST plus SGST, ITC. No, ITC, as Akash Electronics is not registered in Mumbai. Type. Ancillary services. Example. Akash Electronics orders food and beverages for the guests of the official conference. Supply of service. Food supply by Raj Hotels. Place of supply. Mumbai, place where the hotel is located. Gst. CGST plus SGST, ITC. No, ITC, as Akash Electronics is not registered in Mumbai. So, that is all for this topic. Today, we shall be discussing the concept of casual taxable person. A person who supplies taxable goods or services occasionally in a taxable territory where he does not have a fixed place of business is known as casual taxable person. In order to provide services or trade in goods at a place where one is not registered under GST, he has to obtain a temporary registration, which is valid for a maximum period of 90 days in the state from where he seeks to supply a CTP. Registration certificate can be obtained electronically after making the advance deposit of GST based on an estimation of net tax liability. CTP is eligible for the refund of any amount deposited in excess of tax liability, which will be refunded after all the necessary returns have been furnished for the registration period. So, that is all for this topic. We hope you have enjoyed the video. In case you like the video, press on subscribe button and click the bell icon. For personalized query, you may reach out to us at